ScotiaBank is now the most valuable company on the Jamaica Stock Exchange. Does this come as a surprise? Was this unexpected?
It depends on which side of the coin you're in, Kalilah, because it's unexpected if you're on the side that is like, but how are they doing so much better than everybody else? But if you've been monitoring Scotiabank's, earnings, its loan portfolio growth, and just even looking at the reports of some listed companies, you would have gotten a sense that, hey, they are the go-to bank, in Jamaica. So what do I mean by that? So to give some context, basically, with respect to Scotiabank, so Scotia Group, I should say, is comprised of three subsidiaries. Bank of Nova Scotia Jamaica, that's Scotiabank Jamaica, Scotia Life Insurance, and Scotia Investments, and then they have the New Jersey Insurance Agency, right? With respect to Scotiabank Jamaica, for one, they've always had a low cost of capital. So what do I mean by that? So they always talk about how banks take your deposits and lend it out to others to make money on it. So to put it into further context, some banks, for example, might earn $1 of interest income, from lending that money out on loans, but they pay about 36 cents in interest expense, to keep their deposits coming in and keep their clients happy. In the case of Scotia, they earn $1 in loans, where they're only paying about like 2 cents or less in interest expense on deposits. So you're talking about a business where the cost of capital is next to nothing. Now, what does that do? When you can pay your depositors so little in the sense of interest expense or interest on their money, because they have confidence in you, they feel comfortable and so forth, it allows for you to have a lot more dynamic pricing in the market. So what do I mean by that? So Musinka Group would have gotten a $3 billion loan from Scotiabank Jamaica at 6% back in 2023. 6% back in 2023 sounds insane today. And even though Musinka is a great business of its own caliber, even for a business of them to get like 6% is still phenomenal. They would have, lent to Augustines Limited for their entry into Jamaica when they acquired Health Brands Limited. Because of the relationship of Pacific Airport Group in Mexico with Scotiabank Mexico, they lent money to, I believe it's the Montego Bay arm of Pacific Airport Group, the ones that run Jamaican Airport. So I'm just showing you that between the growth on the business side, commercial side, and then the growth in the mortgage side, which is pretty phenomenal, because back in 2019, the Bank of Nova Scotia, or Scotiabank Jamaica, they had about $37 billion worth of mortgages, residential mortgages, right, Kalilah? Not talking about mortgages that includes, what that mortgages to register property for a commercial client, talking residential mortgages.
Right.
They had $37 billion then. They're at $97 billion now in 2024 October.
Wow.
And they've grown their mortgage book by at least 25% for the last 3 financial years. Now, to put it into context even
Look up
further.
Audrey Tugwell Henry.
Well, to put it into context even further, Kalilah. So think about this for a second. Before banks had to adjust their rates upwards in 22 and 23, right? Scotiabank was offering mortgages at 6.49%. That sounds impossible to hear about today in 2024 December. So think about it for a second. If I want to take my mortgage, if I wanted to, say, hey, I want to own something, I'm going to look for the cheapest source, and that was Scotiabank. And even after they adjusted their rates back in March, and then the 50 basis points, Scotiabank's mortgage rate at 8.99% is among the cheapest in the entire market. So one of the larger banks, they're offering mortgages at 11%. Building Society is offering at 10.85, which is 13%. So like from Scotia and CIBC Caribbean Jamaica, most other banks are offering either in the double digit region or 9.5% and above.
So how is Scotia able to come in so much lower than everybody else?
I just mentioned it, Kalilah. They have very cheap cost of capital. So let's look at the structure of Scotia Group, right? Scotia Group didn't necessarily seek to expand to facilitate some level of potential growth by acquisitions or so forth. So, for example, NCB Financial Group, they have NCBJ, the bank, Guardian Holdings, Clarion, right? When NCB Financial Group refinanced debt recently, about $15 billion, that's an extra $1 billion interest expense each year. NCBJ supports NCB Financial Group, and that $1 billion interest expense has to be passed on somewhere. So that is where you might see a little bit of stickiness in rates coming down at NCBJ. In the case of Scotia Group, they don't have debt. So they don't necessarily need to, have to be considering, all right, I have a IDB loan or some other loan at 7%, 8%, 9%, and I need to match a particular cost of capital about a particular spread to be profitable. They don't have that scenario. As I mentioned earlier, the interest income from loans is matched by 2 cents in interest expense on deposits. So when your deposits are that cheap, you're literally, able to really benefit from extremely aggressive pricing in the market. And the thing is, ScotiaBank is heading into the best of the best, in the sense that if I can put a $310 billion portfolio, right, Kalilah, and less than probably 15 billion is what you'd call bad or stage 3 or impaired. So you're growing your portfolio on cheap credit, or I should say, cheap capital. Then on top of that, you're getting into the best quality borrowers. So then, like, you get any money willy-nilly, and you're saying to yourself, all right, I have a $50 billion, non-payment loan book, that's bad or whatever. No, you're just growing your loan book, and you're having very minimal increases in defaults or bad customers.
Good for them.
No, so I'm just giving you the context, Kalilah. Like, if you're getting Scotiabank, Trinidad and Tobago, or other markets Scotiabank operates, that between that mixture of, low cost of capital, the consolidated operational costs, that come through Canada. So, like, for example, the Scotiabank Caribbean app is the same app used in Jamaica, Trinidad, Barbados. So, one platform, shared costs. So, like, for example, about $3 billion each year is paid to the Bank of Nova Scotia Canada by Scotia Jamaica as expenses. And just to give a little bit of further context what I'm saying, based on my calculations, after subtracting intercompany transactions, Scotiabank Jamaica would represent call it about 1/3 of the Caribbean and Central American revenue for Scotiabank in terms of net profit for Q4. So Q4's net profit was 170 million Canadian dollars. Scotia Jamaica, after I did a little bit of rough math to pull out the intercompany transactions, they're at about $53 million in terms of net profit. So this is just to show you context that, hey,
prize
Scotiabank
child.
Jamaica, that is why you see Scotiabank Jamaica, not in any consideration in Canada or even in the region, talking about divestment. So so the reason I mentioned that a while ago is that basically Scotiabank had a leader, prior CEO Brian Porter. He was a lot more conservative. Scotia Bank would have sold a good number of its Eastern Caribbean operations, sold Belize. I don't think they sold Guyana, but they have sold a number of regional operations.
They're not selling Jamaica. They're not selling the Pearl.
No, but think about it, Kalilah. Jamaica is spinning off consistent cash flow every quarter, not having any difficulties in converting that money out. So think about it for a second, Kalilah. Jamaica and Trinidad are two very large markets in the English-speaking Caribbean, right? Scotia Bank Caribbean Holdings, which is the holding company they use, owns 71% of Jamaica. They only own 50% of Trinidad. And Trinidad is having such terrible FX issues right now, such as of December 1, you cannot use your Scotiabank debit card out of Trinidad at international ATMs or point-of-sale machines.
Yeah, so lots of issues. So I want to come back to Richardo, but before we do that, so somebody pointed out that Scotia fell back to number 2. So I just checked it on My Money JA, and yes, indeed, but it's neck and neck. So they're neck and neck with Massey. They move back and forth, I suppose. Let me just show them, David.
So just to give some context, Kalilah, my story is the largest Jamaican company. I did not say the large. I made that very clear distinction with that very particular noun. I said the largest Jamaican company, not the largest company, JSE. It was on Thursday when it's at $54, but it's the largest Jamaican company of market cap, not necessarily the largest comparing the JSE right now.
Okay, so this is what it looks like. Massey is at 8.7% market of the JSE. Scotia Group Jamaica is at 8.6%. So $2 billion separate them right now. 162 billion compared to 160 billion in market cap. All right, so wow, I can't believe the time has gone so fast. I have a lot of questions from the audience. I'll take maybe about 3. Let's see what the audience wants to know from you guys. Let's see. So, Sean, first of all, I have to question the premise of your question here, Sean. Sean says, Jamaica is technically now in a recession. How do you see that affecting the stock market next year? Sean, who tell us that Jamaica is now technically in a recession? That is...
Kalilah, remember, technical definition of recession is defined as 2 consecutive
David, let
negative
me
quarters.
finish saying what I want to say now. Jeez. You're not even let me finish what I'm about to say. So he's claiming, so yes, exactly what I was going to say. So Jamaica is not in a recession. Our recession numbers are determined by Statin. The latest numbers from Statin are up to the June quarter, April to June, which has not indicated a recession. What you may be referring to is the PIOJ's numbers. PIOJ has projected a decline for the July to September quarter. And usually Statin follows on from PIOJ, but it becomes official when Statin reports it. So PIOJ is just a projection. And either way, that projection is for 1 quarter. A recession comes after 2 consecutive quarters of economic growth. So you're way ahead of yourself, Sean, but I will still pose the question. There is an economic decline, or a projected economic decline, according to PIOJ. So, Richardo, how do you see that affecting the stock market next year? You're muted.
Oh, I'm sorry. Still carrying that from 2020, right? Speaking on mute. The first thing is that this thing about 2 consecutive quarters of negative economic growth constituting a recession is not really correct. It's just a convention, because you have instances elsewhere where you could have 2 consecutive quarters of economic of decline or negative growth, and it is not yet a recession, right? So we need to be careful about that. But the larger point, however,
that's usually politics. So they will try to argue that it's not technically, especially if it's just a minor point something percent. They're going to try to argue that it's not a recession. But
but the larger point, however, is that is a concern about economic growth,
right?
And we also should be reminded that, before heading into 2020 and COVID-19 stroke, if you plot the quarterly GDP trajectory, we're actually on that economic descent, right? Then we had the local fiscal stimulus measures kind of propped up growth somewhat. So in essence, what we're kind of seeing now is a normalization of the economy. And this wasn't helped with the fact that recently we had the passage of Hurricane Beryl, which itself took away some of the economic momentum that we had. So based on what the PIOJ is forecasting, we would have economic growth of anywhere between 0 to negative 1%, I believe, over the financial year. And in terms of calendar year, it is still going to be quite anemic going into next year. Now, what we can link this to, right, is a problem that has belabored Jamaica for a very long time, and that is what we call anemic growth. We just have not seen growth to sustain, our growth being sustained in the local economy, which is why the Prime Minister recently has effectively pinpointed that as something that is now squarely in focus for him. How can we unlock growth in the local economy? Now, stocks, as you know, is of all the asset classes, this is the one that is most directly impacted by economic growth, because once there's high growth, it means there's high earnings. Once there's high earnings, it means that companies are doing well. So if the expectation is that we're going to have really docile economic momentum next year, then that indicates that earnings, particularly in, say, the real economy, etc., is likely to be on the lower side of things. The financial companies, however, could have a better fighting chance to the extent that they can reallocate or redeploy some of their financial assets into better performing investment securities in the global markets. That's one. And two, to the extent that we see any kind of capital markets activities resurging, that is maybe some debt refinancing or new issuances, that could give us some fee income. But then again, that is a function of how robust the economy is likely to be. So to answer very directly, we don't expect a banger year for in 2025, just given the economic momentum, right? However, what I'll say is this, right? Because we always emphasize the idea that you're sitting at a point in time now, right? Knock on wood, all of us are going to be around in the next 10 years. And we're going to reflect and we're going to look back at this moment and say, hey, you know, at this point when we were talking, we had some fantastic assets that were trading at some ridiculously good valuations. So we have to look at the companies that have very good management, like what we're talking about this evening of AS Bryden, the associated companies within that complex, such as Seprat, for example, fantastic and terrific and experienced managers. Those are trading at really good discounts, right? Now is the time really for you to be averaging into these companies that you think will be around for the next decade and decades to come. That is when you will actually make money. You don't make money at the top of the cycle when every major concern is already priced in. It is now you really should be taking the chance to bet on some really good companies. Look at those companies, for example, in the financial space as well, that is repairing and preparing their balance sheets for a new regulatory dispensation when, say, the Twin Peaks regulation is here and Basel III is fully worked out. What will that look like? Who will be better positioned to finance the growth as we go forward? So that is what I would say. I think you should effectively change your investment horizon to a longer time period. The final thing I would say on this, Kalilah, is that there is actually, when you are a retail investor, you actually have a significant advantage. I'm letting out the secrets here, right? You actually have an advantage over the fund manager guys like myself, right? We are managing against a benchmark. We have to be thinking of our returns year on year on year. You don't have that constraint. So you can engage in what we call time arbitrage. You have the capacity to really look 3 years forward and to buy at really good prices and then grow into your valuations. Imagine buying some companies at 5 times earnings. In 5-10 years, those effectively can be significantly higher multiples than that. So that is really where wealth is made. One of my favorite investors, Charlie Mungus, loves to say that, listen, the wealth is actually made in the waiting. So buy and watch your assets and wealth grow.
But still, I know our viewers are going to be disappointed to hear you say that you're not expecting a strong year for 2025 based on the economic numbers. But isn't this recession, the negative growth that we are experiencing this year, wouldn't you say that's primarily because of Hurricane Beryl, and so that's not likely to continue?
Yes. So even if once you read like the Bank of Jamaica's Monetary Policy Committee meeting reports, the BOJ's quarterly monetary policy report itself and the PIOJ, it did indicate that the the impact of burial will be a drag in the near term, right? But where growth will eventually resettle is going to be on the lower side of things, right? Because you have to think about it, right? You have to think about the economy as
well, it's been on the lower side of things for years upon years.
And
the only time we had
need
decent growth was right when we were recovering from COVID. It was the only year we finally hit the 5 and 4, the 5%. That was,
and this is where now I think things can get interesting, right? If we have the Spark program, which just by virtue of how you compute GDP, that is something that will translate into incomes. It will translate into what we call the gross capital formation of the country. The same thing for this JPS project, 17 million US. The same thing with the Pan-Caribbean joint venture at Rio Cobre. Once we have some of those large infrastructure projects coming on stream, then that will actually help to stimulate and sustain growth. But what we really want to, the point that I really want to get home is that you cannot expect a significant growth of 5 and 6 and 7% if we continue business as usual. We have to get the mechanisms of growth going, which is effectively where I hear the Prime Minister recently focusing, which is why I'm saying and recommending to our viewers that, listen, I know it's painful to not, it's like expecting a bonus next year and don't get it, right? But you have to take a longer term view, just given where we are in our economic cycle.
Well, Shells, why you call me out like this? Shells says, so Kalilah don't think Jamaica is going to get hurricane next year. Do we want to bet on that? I would hope not, Shells. I really would hope not. Category 4 is quite enough for 1 year, given that I was in the heart of the affected 4 weeks without electricity. Not looking forward. Let's not speak that into being for next year at all. Let me take one more question before we wrap. Let's see who else we have here. Okay, I'll take this one from Sean, and I'll give both of you a minute to respond. So David, and I say a minute because we want to wrap up soon. David, what big economic event are you looking out for going into 2025?
To be honest, it's just seeing how the larger economies play out amidst not just the change in political leaders, but also just amidst the different players in the space. So we're seeing China really dominate in the vehicle space, not just EVs, but just in the vehicle space. Germany right now is continuing to suffer without cheap Russian gas. Canada's currency has taken quite a hit against the US dollar, especially with the finance minister resigning. And we have a couple of elections coming through next year. So in terms of economic outlook, it's going to be mixed. USA probably will have some level of positivity. Jamaica is watch and see, especially as we look forward to our own general election. And globally, that's going to come down to just potentially no major disruptions or levers being pulled to disrupt China, USA, or any other major global markets.
I'm glad you brought up Jamaica's election. So, Richard, I'm actually going to switch up the question on you. Follow up on that. Lori wants to know, do you see the upcoming general election affecting the local market being positively or negatively?
Typically, it is positive in more developed economies. That's typically the case because of the spend that the parties usually expend to get their voters out and so forth. So the expectation is that could be positive for the economy in general. How long it takes to impact the local markets could take some time, because could take some time, but there are specific companies that are directly tilted towards maybe that space. And I'm just saying, I'm not implying any kind of political connections or anything, but if you think about, like, say, a main event, it is just right there You expect a lot of events, a lot of maybe stage shows, that kind of thing, and they are well positioned to take advantage of that. So you can think about it in that respect, in specific, sectors. You can think about something, a company like Wysinco, which has the most stock keeping units of all distributors locally. But I need to check if that is still the case. But there are, you can hardly buy anything without buying something from Wysinco's stock keeping units. So people are going to buy drinks, people are going to buy cups and all of that kind of thing. So you can take very specific and sectoral interest, but at the level of the stock index itself, I'm not quite sure if that is going to have an immediate impact. It might take some time to work its way through.
In the US, typically the markets react more favorably to Republicans as opposed to Democrats. And so and because of policies that Republican governments tend to have. Is it like that in Jamaica, where the markets react more favorably to one party over another?
That is an extremely data dependent.
Do we have that data?
I don't have that data.
I feel like I need to get like a master's student at UWI to research that. That would make a good research topic.
I think so. I think so.
Well, thank you so much for joining us, Richardo. Great hearing your perspectives. And David, thank you as well. The OG, always reliable.